come on, we like it's 8 o'clock to know where your kids are.
Yes.
Do you remember that? We're like,
The answer
how things have changed.
would be, no, I don't. When I was young, anyway.
Happy Friday, everybody.
Happy Friday! Welcome to Finance Friday. This is the show where we give you all the information you need to help you grow and protect your wealth. I am Amy Novakovic, and this is
Beth Henchesmore.
Thank you so much for joining us. Make sure you follow us and share this on social media.
What?
Oh, need a code?
Okay. Just as we started, that's what happens. This is our life at Nova.
Yes.
You're going to get on.
Here we go.
Are you going to send it to him?
To you?
Okay.
Well, I'm not going to give you the code in case somebody's logging in on Facebook.
It's okay.
Oh, here. I sent it to you.
Pardon us.
That is not what we're talking about today.
No, but that's a normal day here at the office.
We're talking about very, very different things.
So when I came to Amy this morning, first of all, we haven't done Finance Friday in many Fridays because every Friday has been something going on.
That's true. And we would like to say we have to prioritize this, but clients are priorities. So,
yes, clients are a priority. So client books at a time right now we're doing this. But what we've seen here recently is a lot of our clients or just people that we've met out in the community are concerned about volatility right now because of the war in Iran. And what does that mean? And people who don't have a plan, they're the ones that are worried. Our clients who have a plan aren't worried. But for the ones that are worried, we do know that there's a volatility in the beginning because there's uncertainty. What does this war mean?
Right.
But then usually we start to rebound. So what are some of the areas that you see that are normally impacted when we have this?
So different things start happening right in the beginning. So the first thing a lot of people do is flock to treasuries or gold, things that are more protected, right? And sometimes I feel like that's actually the opposite mentality. So they flock from stocks and they go to safer assets, which temporarily obviously makes sense. But then when do you buy back in? So if we feel volatility go on and on and on until we have a 20% dip, which is fair market, by the way, if you ever hear that term, that's 20%. But then also, typically when you're in wartime, I don't like to call this a war yet.
Right, but our military is activated.
It is international tension, yes.
Yeah.
So typically what you'll have is inflation, because obviously, in the first place we see it is oil and gas, okay? So what does well in inflationary times? Historically, the stock market and real estate. So what we see is this temporary flock to safety, okay? So we have gold, again, treasuries, things like that. And people aren't reacting rationally, they're reacting more emotionally. So instead of having a plan of how much do we buy, and I think everybody's worried, and I don't want to say, I said correct when you said our clients aren't worrying. And that is true to a certain extent. It doesn't mean we never get phone calls because
correct.
This could turn into world war. I mean, I guess the worst case scenario thinking says, what if this is World War III? And we haven't seen that since World War II, I guess, So that's the part that we're in a totally different economy, a totally different world of the money floating around out there than when we had World War II. So it's hard for us to even say what would happen. All I can tell you is historically, if you have 10 plus years before you plan on not working and pulling from your money, typically buying on any dip is going to make sense in the long run,
right?
In a decade's time, because even after world wars, the market has recovered. And again, we're in such a different place. It's hard to really compare if we were in like a World War III now. And I guess my next question to an economist would be, what's even the likelihood with technology, with the weapons that we have, with the internet and people tweeting and all this, what is the likelihood that we would even have like a world war like we had in the past? We're in such a different place in time and history.
Correct.
I kind of feel like it would be kiboshed one way or another very quickly with the amount of force that we have in some of the larger military leading countries. So again, let's back up and let's just say, what do people normally do? So people normally do flock to gold, so and treasuries. So if you do feel like you're looking for an investment safer because you're thinking of retiring next year, maybe that does make sense. Maybe that's a part of your plan. So like we would already have that as part of somebody's plan.
Right.
We would already have them in some safety already as a part of the plan. Because as you get closer and closer to retirement, you certainly want to have a diversified mix of things that are not in the market, right? So, but most of the people I would say that watch these lives are those that have 10 plus years to retirement. So it's two totally different approaches, which is why we always say call us and come in so we can give you more of an individualized approach. And this is who Beth is always talking to, is prospects from all different ages.
And I've met so many in the last 2 months.
Yeah.
That are within 5 years of retirement, right around there, 5 years of retirement.
Yeah, that does seem like it's happening a lot.
They have no plan, none. And I'm saying to them, so what is happening? What are you doing currently? Do you have somebody that you're working with? Are you managing on your own? What's happening? And it seems like all they're worried about is like how to stop working, not necessarily what their income's going to look like once they retire.
Right.
So when we have situations like this, it's happening right now, where we've got some volatility happening, I think some of those people might be like, well, maybe I need to stay, because if my portfolio drops and I can't afford to live off of that. Like, I just sent out an article the other day that talked about when is enough money enough?
Yeah, and I'm never going to tell somebody, you know what, you saved too much money.
Yeah.
That's not a thing.
Yeah. They asked people, what is your magic number? And if it was $10 million that you had saved and you felt like that was enough, like people who even had that amount, how they still felt uncertainty. Right. So that exists. There's no magic number. There's no magic day in the stock market. There's no magic anything. It just comes with a plan, and you have.
And sometimes the plan is being more aggressive. So there are people that make money on the way down, and there are different strategies that we can't get into on a live because it is too aggressive. It's aggressive to bet against the market, but people do it. And people do ask me, like, how do we make money when the market goes down? It's like, all right, there is a lot of ways, but if you're wrong, if the market rebounds right when you're betting against the market, I will tell you that's a terrible feeling, because now you're like, dang it, the market's going up. Well, and it's not a great feeling, but there's ways to make money on the way down, and it usually is short term. You know, history, if you go back to the different wars that we have seen since World War II, it's been a pretty temporary dip. Correct. Within months. The market typically comes back. And correct. I know we weren't involved necessarily with the Ukrainian-Russia war, but I remember right after the night that Russia invaded Ukraine, we did have like international clients in a total panic. Like, get me out. This is a big deal. This is going to start World War III. Get me out. The market did feel it for like 2 weeks. It was so temporary. Right. Because if you remember, right after that, the market did rally. Correct. Happy Friday, Ann.
I do remember that.
So it can be, you know, and I'm not saying that this time wouldn't be different, because again, we are involved in a different way at this time in the Russian-Ukrainian war. I'm just saying that sometimes we don't want to overreact because we don't have a plan. And a plan meaning, again, not that just you're diversified and stay calm and sit tight and do nothing.
Don't worry.
Yeah.
Market comes back.
That's not what we mean. We mean a plan, like an action plan of what to do when markets do go down, regardless of the reason, really. And in war, the difference is the sectors that do well in war. So you've got utilities, again, gold, commodities, treasuries. So you've got different energy, defense. So you've got different places that do well in times of international tension. So we want to look to those areas. So you might have to pivot. You might have to have that action plan of, if this happens, then situation. And I think we've been successful at that and calming a lot of the fears. I'm not saying people don't call to talk about it, but it is very rare that we do have a client that calls in a total panic, because they do understand the way we work.
Right. Yeah, and that I've actually been able to talk to several people that they were fine. Everything's fine. That's Amy's favorite line. Yeah. Everything's fine until it's not.
Dangerous.
And just that they didn't have. They don't know what to do when they have volatility hit. We've met folks that have had several large positions and are concerned about how to get out of them because they don't want to take capital gains. So they keep them, and that's not a plan, especially if your portfolio is going down and that position that you want to hold on to suddenly starts, well, hopefully not bleeding, but it's maybe lacerated. They are worried about it because they're banking on that as helping their retirement. So
for sure. So the last thing I want to talk about is sequence of returns, because right now we've had all-time highs for a while, and obviously you could always have a new all-time high next week and a new all-time high, and that could keep going on and on and on for the next 2 years. I don't know. But statistically, we do have a 10% correction once a year, statistically, on average. And so with that expectation, what are you being told? What is going to happen? And not just, you're fine, or, oh, I'm sure there's a plan. Like, there needs to be something like that. So because the difference between fine and having a detailed plan with somebody who has a different level of expertise. This is the difference. Sequence of returns, and actually we should have posted this slide, but this is something that we go over in our workshops. 2 different people, same portfolio, both pulling 7%. One started with negative returns, one starts with positive returns. The one that starts with negative returns doesn't do so well. They are out of money by year 13. The one that starts with positive returns, again, same returns, we just flipped them. So same exact returns, it's just the negative was first and the negative was last year versus the positive was first and the positive was last year, but same yearly returns. You just flipped them. So it's called sequence of returns. So when did you get the return? In the order of your years. And the answer is if you have negative returns, it doesn't turn out so well if you're pulling shares from a bleeding account versus having a plan of where you pull your shares from. Now, the other person with positive returns more than tripled their money.
Right.
So it is a big deal, the difference between I'm fine and having a next level experience with someone who thinks about all these different things. Just buying and holding a dividend stock strategy may not be appropriate anymore. It maybe used to be fine, but now we have to take a different look at things, and we have to take a look at taxation, and we have to take a look at just all things, how fast everything moves.
Yeah, the retirement of your parents and grandparents does not exist.
That's very, very different.
We need to make sure we're looking at that. And keep in mind all the things that are now part of your life that certainly, I mean, can you imagine if our grandparents knew about ChatGPT?
This is new stuff.
Anyway.
Yeah, like software companies. I know we're getting off the topic of Iran, but look at software company stocks that in the last, so Salesforce, Adobe, in the last just few months, and you'll see kind of what AI is doing to even software. And so things change. That's my point. You can't just hold stocks forever because things do change. And we certainly need to take a look at that, because like GE was a staple that people owned for a long time, and that stock went down. Ford, AT&T, until they cut their dividend. And so in times of, if anything, in times of international tension, I keep saying that instead of war, international tension, it's time to take a look and dive deeper into your finances and your portfolios and come up with that pension plan. I think that's it.
Okay, so for our last pitch here, if you work in the financial industry and aren't able to do as much in-depth planning or work for your clients, if you feel a little...
We want a fun place to
be. We are pretty fun. We are a fun group. We are hiring, and we always want to look out for people that could add value to our team, but we could also add value to you, because the best teams work with each other and work together, and that's what we do. She does not pay me to say that, actually. Did say that even when I was not working for her.
Sure.
That was the first thing. And the second thing, I mean, we did talk about Iran today, and I have an unfair advantage because I think a lot of my closet's red. And red stands for remember, everyone deployed. And especially right now, if you've never been a military family or a first responder family and had your loved one leave and you're not able to contact, or if you are able to contact, it's limited, that's its own version of stress. So Fridays we wear red to remember everybody deployed, whether we are in times of tension or not, whether everybody is stateside or not. So you can always join us and wear it too. It's just your stand with, we remember people that keep us safe and allow us to live in this country and do lives like this. So That's
I
my,
have red lipstick. I didn't remember it was Friday this morning.
That's
being
okay.
dressed, so I should just keep an arsenal of red in my office.
like I said, I have an unfair advantage because it is my favorite color. But I did come in to see Amy last night and I went, this week has been, it's been a week.
It has been a week.
Thank goodness I said we made it. Tomorrow's Friday.
made
So thanks for hanging out with us. We always
Yes.
appreciate anything you want us to talk about on Finance Friday. We appreciate that. If you want us to talk about our Surviving Retirement workshop, we have a couple different workshops that we do. Want to come out to your community or your group, you want us to speak, happy to do that too.
Let us know.
All right. You all have a great rest of your weekend.
Yes, and we will see you when we see you.
Gosh, I hope it's next week. All right. Thanks so much. All right. Bye-bye.
Bye.